Hello and welcome to the Music Business Buddy with me, Jonny Amos, podcasting out of Birmingham in England. I am the author of the book, The Music Business for Music Creators, available in hardback and paperback and ebook format. I'm also a music producer and songwriter. I am a consultant, an artist manager, and also a senior lecturer in both music business and music creation. Wherever you are and whatever you do, consider yourself welcome to this podcast and to a part of this community. My goal, everybody, is simple: to try and educate and inspire music creators from anywhere in the world in their quest to achieving their goals by gaining a greater understanding of the business of music. Okay, in this week's episode, I am returning to a subject that I've looked at before, and that is Fintech. So I was first alerted to this subject all the way back in episode 27 when I met the fantastic Keith Jopling, who is a music consultant, researcher. He does all sorts of different things, one of the most impressive minds in the UK music industry. He's a former global head of strategy at Spotify, and he alerted me to the subject of Fintech and how it's changing the artist funding model. Now, I followed that up in episode 28, kind of explaining a little bit about what Fintech was. But don't worry, if you're in a rush, right? If you don't want to jump back and find that episode, I thought I'd do another episode on it because that was over a year ago, right? And in the grand old scheme of things, in time, a year, it's not that long. But in the music industry, a year is a really long time, isn't it, right? With all the change that we witness, especially when it comes to finance and technology and where those two things intersect. So let me just zoom out and think about this objectively, right? So decades ago, in the 80s and the 90s, where the recorded music industry and music publishing were absolutely flourishing because consumers were buying physical product, it was a golden boom of economics, right, in the music industry. It made lots and lots and lots of money, and it hasn't really done so since in the same way, because when physical products stopped and things got digitized, it changed a lot of things. We know this, right? In fact, I did a recent episode on Napster and the history of Napster and what they're doing now, because that's something that really fascinated me, because to me, there is a before and after in the music industry, and Napster sits right on the middle of it. There was a before and after, right? So that's okay. I'm not here to moan about stuff, right? It is what it is. There are so many amazing opportunities in the music industry. In fact, I'd be as bold as to say it's probably better now than it's ever been for a whole multitude of reasons. And one of them is because of where things are headed in terms of funding for artists. Now, let's think about this, right? In the dawn of the digital download era, so we're talking about the Web 2 era, early 2000s, people started to not want to pay for music anymore. We know all about that. If you don't know all about that, that's okay. Music sales stopped, right? In the Western world, at least. Now, what happened after that is that people started to download music, and then eventually streaming came in, and it kind of felt like streaming fixed things, but it didn't. I'm going to explain why and then explain what the solution is to it. So when streaming came in, it kind of audio streaming, and visual streaming as well. Music makes a lot of its money from media, of course, as well. So when that all came in, it started to, in some ways, remunerate rights holders for their intellectual property, for their songs, for their recordings of their songs. Those are the two things I'm really talking about, right? Now, it only kind of went partially to partial recovery, let's say, because as we all know, and I don't think I'm telling you anything new here, it's a rather broken economic system. It doesn't really make money in the same way that music used to make money, because people, and I think a lot of people moan about like, Spotify don't pay enough, and I get that argument, but the problem again with that is that we don't pay enough, actually. That's really the problem. We don't pay enough. We pay like, £10, $10, whatever a month for our streaming service, and it's not enough for it to go round. So there's a broken economic. If all of a sudden we started to pay £40, £50, then it might fix it, but people don't really want to do that. I don't want to do that, neither do you. That's okay. So there is another way forward. Now, if we think about this again, quite objectively, so audio streaming has been around now for 13, 14 years. And during that time, we've kind of learned about this broken economic system where it doesn't really pay out enough to rights holders. We know that. I'm not presenting anything new to you by telling you that. However, what it has done has created an immense amount of data. And that's data locked in culture, and music is culture. Now, there's a link point there between where that sits and where the fintech world comes in. So let's just dive into understanding what fintech is, and then we're going to look at its role in the music industry. So let's just start off simply by explaining what fintech actually is. So fintech is a hybridized word, fin and tech, financial and technology. So those two words meet and they make fintech, right? So fintech companies use software and apps and AI to make financial services. They make things faster, they make things cheaper, they make it more accessible. And instead of visiting, let's say, a bank branch and dealing with paperwork, fintech allows people to actually manage their money digitally. So think Google Wallet, Apple Pay, Stripe, PayPal, mobile banking apps. This is all fintech, right? Now, where else does fintech operate? Well, biometric authentication, right? Things like LinkedIn. If you want to verify your information on LinkedIn to become verified, that's a form of fintech, right? AI-informed fraud detection, encrypt transactions, blockchain, decentralized finance, lending. So if you want to buy something online and it costs, let's say, £200 and you think, I want to spread that over 3 months, then you can use something like Klarna, fintech, right? Now, the other thing that fintech does is investing, and that is what we're going to look at. Okay, now, fintechs are operating in the music industry because artists are data rich, right? So businesses operating in a global digital ecosystem with fairly broken financial infrastructure like the music industry is where fintech really starts to thrive, because fintech can modernize payments and royalties, financing, also fan monetization. So if you roll back to some of the interviews that I've done with some big CEOs about the companies that they're starting in the Web3, this all falls in line with decentralization and with actually artists having control of their careers. I know this is a lot to follow, by the way, everybody. So I'm going to try and simplify some of this now to actually explain how fintech finances from giving artists money to invest in their careers. Okay, artists need money, right? There's nothing new about that. It's not going to go away. It's still going to be a thing. Artists need money because they need to spend money on recording music and on marketing the music, and also money to live on, right? Now, traditionally, as we know, you can get advance from a record company, from a distributor, from a music publisher to be able to do that. And that's the system that we know. And that still exists. And I think that that will continue to exist for various reasons, right? However, there is another option here, and that is fintech. So you may have noticed I recently interviewed just a few weeks ago, Elliot, who's the head of growth of Duetti. Duetti, a fintech company, right? So they will invest money in an artist in exchange for a partial or wholesale of their music catalog. And they then can also use their marketing tools to be able to use that catalog and drive further revenue on it. Now, the data is the crucial aspect there. So let's just dive into that a little deeper. Artists are effectively running their own brand business now, right? Regardless of who they're signed with or who their stakeholders are, they can launch products, they can build fan communities, they can own IP, a music asset class in its own, whether that's songs through music publishing side or recordings through what would traditionally be signed to a record company, still can be. They also run their own direct-to-consumer business. Now, there's nothing new about that, but how that is monetized is starting to change. So if we think about how fintechs operate, so the financial operating system for creators, fintechs are not just a bank, they're a platform, right? So think about artists checking their accounts, their smart wallets, their expense tracking, building credit on fan engagement. You know, where a bank might run a credit check on an artist, a fintech wouldn't do that. Instead, they would look at their data, their fan engagement. And that could be data in regards to reach in social media or in regards to reach through streams. That data is absolute treasure to fintech companies because of how they operate. So what do fintech get out of this? What do fintech companies actually achieve by doing this? Music gives fintech a cultural credibility. It gives it a younger audience. It gives it an organic community growth. It gives it brand differentiation. For fintech startups, competing on features is actually quite hard, but competing on culture is powerful. And music, as I mentioned earlier, is culture. Now, blockchain has also accelerated the convergence. Now, I know what you're thinking. that created itself somewhat of a distorted understanding, let's say, in the early part of this decade, especially when we started to understand NFTs and what they do and then where they went wrong. But I boldly predict that they're going to come back and they're going to be called something else. And that's going to be a part of this too. Blockchain offers smart contracts, automated royalties. It also offers transparent ownership records and programmable payments. Now, we know that labels and legal systems are slow to innovate. The music industry still runs on legacy contracts, on manual reconciliation, on long payment cycles. Fintechs don't do that. Fintechs offer a build around creator first model, let's say. So we're talking about modular services that can integrate with modern platforms. Now, if we then think about the acquisition of catalog and how that catalog can be used to share data, what we're seeing is that music is an incredibly powerful tool for fintechs to be able to invest in. And even if they lose money on it, they gain in other ways. That's totally different from a record company, isn't it? A record company would want to invest in an artist to be able to say, we'll give you this in the hope that we not only get it back, but get more. Fintechs do that. But instead of just getting money back, they also get data. And that data-rich flow is absolutely crucial to what they're all about. So when artists think about their intellectual property, their songs and their recording of those songs, there's a different type of value that's added to it other than just the music. It's the role that music plays in other things. Now, we've known for many years now that music in itself, in its own intellectual property, in regards to sales and digital and fixed digital, i.e. streaming, we know that that doesn't really make as much money as it used to. We know that. And my goodness me, so many people have tried to change that and to fix it, and maybe people will, but I don't think it will happen. So instead, music has had to transition into making its money effectively through media, through sync licensing in a whole heap of creative ways, whether that be through television, through ads, through games. That has started to become the new answer to how to monetize music IP. Now, what I'm presenting to you is another way. Now, music intellectual property has become a higher value asset class in recent years. We started to see a lot more catalogue sales. Here's why. Streaming creates predictable income, and investors want to yield and diversify. Better data reduces risks because it tells people more about what's actually going on. Artists need upfront cash, and additional revenue channels through sync have grown. Together, all of these things turn music catalogues into highly sought after financial assets. Artists and rights holders, songwriters, producers, whoever owns rights, can exchange those rights for money and then parallel other income streams against that. That's what we mean when we say an artist-centered ecosystem that also has other things where an artist makes money. Now, streaming, we know it doesn't make money, but there are huge upsides to it. So let's have a look at that. Streaming has created predictable long-term revenue. So streaming platforms like Apple and YouTube and Spotify have turned music listening into a very steady recurring revenue stream rather than one that's driven by physical sales, one-off downloads, or patches of campaign management that show boosts and then drops. Older catalogues earn ongoing royalties as listeners stream them, because the idea of what is new has almost gone now to many people. I remember just streaming a song for what I thought was the first time just yesterday on Discover Weekly on Spotify. And I thought, wow, this is really cool. And then I looked at it and I was like, oh, it came out in 2016. And I felt a bit silly, but it doesn't matter, does it? Because that was new to me. And that's how streaming works in terms of music discovery. So if we put that back to a legacy catalogue, no wonder we're seeing so much catalogue sales, because all of that old data, if you will, is now new data, and old songs are now new songs. Now, these cash flows are predictable and they're long-lived, right? And they're very, very attractive to investors seeking to yield. So this matters because investors can model future income with more confidence than in the past, which makes music catalogues resemble long-duration financial assets. Music catalogues also offer higher yields with many bonds or saving products. So institutional investors like pension funds and private equity and hedge funds began treating rights as alternative income assets. But as markets mature and data gets better, it means that music and artists have a completely different metric for not only growth and discovery, but also value. Okay, so I hope that kind of makes a little bit more sense. Please do, I say this a lot, but I really mean this, guys. Feel free to reach out to me, ask me questions. I don't claim to be an expert on this subject. There are a lot of people out there that are experts on this. I suppose if I have an expertise, hopefully it's in the music industry. And the music industry can feel like it sits so separately to other industries. So one of the things, if you listen to this regularly, you'll know that one of the things I like to do is look at other aspects of the creative industries to see what we can learn in the music business about how the film industry operates, or how casting works in films and television compared to how it works when it comes to talent scouting for labels. It might sound like two completely different worlds, but they're not. If you're wondering at any point, what on earth do all these financial services and technology have to do with the music industry? My answer to you is simple. Everything. Okay, that's a little summary on that subject. It's time to start thinking about it, everybody, because I don't think this is a flash in the pan. I think it's not even the future. It's already here. It's kind of like AI, right? The fact that there's a huge crossover between fintechs and AI. There has to be, right? Because it's all deeply rooted in technology and where data sits and how it informs people and how it informs people's creative choices and decision-making processes. So there's a lot to think about here, I know. But if I was to boil this down to simplicity, it's this. Artists need money. There's only really been two ways that that's worked before. Either artists spend money, their own money, or they get it from an investor like a record company, a music publisher, or a distributor. Now, there's another way to get that money, and it's just understanding how it operates. So when I interviewed Elliot from Duetti recently, it suddenly became clear to me that actually we're not necessarily talking about big A-list music recording artists that they're trying to work with. It's actually more grassroots artists as well, and mid-tier, mid-level artists. It's a whole range of different people. So if you're making, let's say, roughly $2,000 on your music revenues per year, you are eligible for working with a company like Duetti. And I mentioned Duetti because I'm very impressed by what they offer, because it's not just the asset class acquisition of whole or partial catalogue. It is that. That's their bread and butter, if you will. But it's also what they then do on the marketing side. Now, when I take a guest on, like Elliot or like anybody else, it's because I believe in their goals. I believe that they will add value to you, the music creator communities globally, right? And so if I talk to a person or I talk about a company like I am now, it's because I genuinely believe that they are playing a role that, yes, it helps themselves. Of course it does. It's business. Nothing wrong with that. But it helps a lot of music creators to be able to get out the hole of, I need money to do this thing. And I don't have that. And I don't know how to attract the interest of a record company. And I hear maybe I shouldn't even do that, right? So I am not here to downplay the importance of record companies. Not one bit. We need them. Right? We need the people at them. We need the expertise. We need the systems that they create, the protocols, the campaign management, there's a list goes on there, right? I am not for 1 minute rubbishing them. I'm just saying there's another way of doing this. And it'll be very interesting to see how record companies build their response to fintech. I don't know what that's going to look like yet, but who knows? Maybe I'll revisit this in another year and I'll do another episode on it. But it's been a year since I've talked about fintech. And as you can see, I've learned a little bit more about it, and I'm trying to do that so that you do too, because I think it's something that you're going to need to know about going forward. Okay, that's enough from me today. Have a great day, and may the force be with you.